Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 20th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've talked about everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data coming out today. We did give building permits, which came in at 1.14 million permits pulled, but that number really is a big headline number. But the fact of the matter is you can pull as many permits as you want. It doesn't necessarily mean you're going to start building. As we saw reflected in the housing starts, was expected to be 1.19 million units and came in at 1.14 million units. So that one to me is a little bit more of a number to look at, is how many housing starts are actually starting to be built, rather than the permits, which is more of a headline number, because the permits is just a little bit ambiguous at the end of the day. I'd rather say, even though housing starts is more of a lagging indicator and building permits is considered to be a forward-looking indicator, at the end of the day you can pull as many permits as you want. It doesn't necessarily mean you're going to be acting on those permits. Anyway, on to the overall markets. We've got crude oil here up 16 cents on the day, but again bouncing off of that fib 50% retracement level that I talked about. That 50 level is right there at $44 and like 50 cents, let's call it. And that's been a real line in the sand. The market just can't seem to get above it. There's a lot of oil out there and just not a lot of demand at this point. Still, to me, a little bit overpriced. Anyway, on to gold futures. Gold futures pushing up against the 9-day. Anytime it's below this 9-day, that's near-term bearish. And we had this crossover, which is even more bearish. But the real line in the sand is right here again at the 1305 area, and needs to settle below that for the bears to really start feeling like they are winning the battle there. On to the bonds. Bonds are up 26 ticks on the day, almost a full point, but still right there, very close to the point of control. It could very well be considered to be, this area right in here is really where the point of control is. I don't see that really moving much from there, although the further along we get, the closer we're getting to this FOMC meeting. Today is actually the first day of a 2-day meeting. They'll come out with the results tomorrow. It's starting to really look like the overall sentiment out there is that the Fed is not going to raise rates at this meeting, and maybe try and push it off to December. One thing to think about here going into this meeting is there's not been a lot of data out there supporting a rate hike right now. Also, I think I read something where 88% of the economists that were polled basically said that they weren't expecting a rate hike at this meeting. Another thing to keep in mind, and a lot of people are saying, well, it's going to happen in December. The Fed does not have a very good history of raising interest rates going into a holiday season. I talked about this last year. They weren't going to raise rates going into the holiday season. Last thing they want to do in a economy that is a little bit fragile at best is raise rates going into a holiday season and try and crimp spending. I don't think that's going to happen. So I was punching through the numbers, and the Fed fund futures are pricing in a 28% chance of a rate hike at this meeting. And another interesting note is I started looking at next year, because I don't think it's going to happen this year, but next year at the January meeting, which is on the 31st and the 1st of February, there's a 28% chance of a rate cut at that meeting. So it's very interesting, and a lot of money being played back and forth on both of those. So keep that in mind. Anything below 50% probability of a hike or a cut usually means that nothing's going to happen. So, but keep that in mind. Right now, we're pricing in a 28% chance of a rate hike in January at the meeting at the first of the year after that event for Christmas sales and stuff like that. That would be more likely to me where they were going to make a move, and that's pricing in a 28% chance of a cut. So play that for what it is. And then on to the NASDAQ. NASDAQ is pushing a little bit higher today, up just over almost 6 points, let's say, right there at the 4,800 level. But the overall cats and dogs living together in harmony seems to be the theory the mantra of the day. We got gold, bonds, equities all up. Everybody should be happy, I guess. Into the E-mini S&Ps up 2 points on the day. If we look at the breakdown of the E-mini S&Ps, you can see that since the open of the day, it's been pretty much all over the place. We started out overnight really pushing higher, and then as soon as the market opened, slammed down to right around where we are now. Then we had a bit of a rebound on the building permits, probably because they're thinking, okay, well, Fed's not going to go, and now we are starting to see a bit of a pullback in there. So the SPOOs, which is the SPY, the ETF for the S&P 500. I talked about this, that I got, I basically let my 217 calls that I was long in the September expire, and I had on the October 204, 220 strangle. So it's the 204 puts I was short and the 220 calls that I was short in there. And I originally sold it for $2.47. I decided to cover that because at the end of the day, if they don't raise rates, we could easily see new highs in all of these equities. And if they do raise rates, it could get slammed. I don't really see it going down to my 204 puts, but I put that on as a strategy and decided to take it off as a strategy rather than to leave those on. So I covered that for $1.70 on that. So a nice little profit on that one, but not quite 50% of what I was looking for. And then yesterday I got filled on my WYNN synthetic short that we did a webinar on Friday. I went through all of the rules of that, and on Mondays I usually go in there and try and put a strategy on around that just to show you guys how it works in real time. And when I did the I did the January that expire on the 20th of 2017, and I did the short the 100 calls and then bought the 100 puts to create that synthetic short. I'm short about 99 deltas on that. It's not exactly short 100 of the contracts, but it's close enough for a synthetic for sure. And I collected $4.25 for that. So right there at 104.25 is where my break even is. So it's slightly in positive territory here, and I'm looking for a win to pull back a little bit, at least down to this point of control. One thing that I was asked about in that webinar, and really did a lot of soul searching over the weekend for that, on an exit strategy, I usually look at 10% of a pullback or a rally if I'm synthetically long for that strategy to cover. So in this case, I would be looking at somewhere around 93 or something like that, which puts me just above where that value area or the point of control is for the time, not necessarily the volume, but for the time where it's been spent the most time. But another thing I was looking at for people that don't maybe have the same risk parameters that I do is to look at what the market is expecting a move in there. So usually if we can look at the chain of the options chain, there gives a probability of a move. Actually, WYNN has about a $17 move priced into it, but I would look at that probably along the same lines as I do with the other probabilities. If the options chain is saying that it's got about a $17 plus or minus move in there, I would probably look at that as half of that move. So we would be looking at something like $8.50 in that move in order to cover that. So that would be somebody that maybe has a little less risk tolerance and or just doesn't want to hold on to this for very long. So you could look at it somewhere along in those lines as well. And I didn't really mention that, but I did a lot of thinking about that. And if the probabilities say that it's a $17 move, we look at half of that move and it's about $8.50. That might be another target for this particular strategy. All right, that's about all I got for you guys today. Friday's webinar is going to be on how to protect your portfolio from rising interest rates. If the Fed does start raising interest rates, and say you have $250,000 in bond in that portfolio, a 1% increase in the interest rates will make the value of those bonds go down by $50,000. So that is a dramatic move. So you really need to be diligent on how you are defending those bonds in your portfolio. You know, if you hold them for 30 years, yeah, sure, you're going to get par value from them, and you know, it'll be worth $250,000 on the par value. But in the meantime, you're going to see a dramatic cut in interest or a dramatic cut in that portfolio as the interest rates increase. So I'm going to be talking about how you can create income around that and lower your cost basis on those bonds in order to make your break even increase a little bit. All right, so check that out. Go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.